Good morning, everyone. Hope you all had a good weekend. I'm still I'm still getting over this flu, man. Holy cow. This one's a barn burner. It's a tough one to get over. Real pain. Oh, I still sound plugged up. Hey, Randy, Ian, Jiraj, Lonigan. Aloha, Cisco. When I lived in Hawaii, I never got sick. How's everybody doing? You guys have a good weekend? Oh. Hey, Leslie, how you doing? Hope you're feeling better. That's a nasty bug. Hey, Raj, what's up, brother? That's good. Welcome to the folks joining us on YouTube. Hey, Moriel, what's up? How are you? Okay, so in the weekend update video, which was really short, and I apologize I didn't put it on YouTube. I wasn't really feeling well at all yesterday. So I just got it out to the room. I said, in the weekend update, I said we should look for a backfill. And a backfill is the market goes up, creates demand, and goes back and fills it with supply. So that's exactly what we did. We got a backfill. We have longs that are trapped in this little area here, and we have what we call a B profile right now, which looks like the lowercase shape B. So all of this inventory is being kind of sold out. It's being caught here, and you'll see that the value area low, which is the cost basis low, is right at the cost basis high for 2 days ago before the move. So we still haven't taken out Friday's low, so it's still an inside day, and we're just kind of hanging out here for a little bit. Now, a gentleman asked this morning when I said inventory is short. So it sounds really complicated, right? This whole inventory long short business, but this is really the simplest thing, and it's easy if you use market profile or if you use a 30-minute candle. What you do is you mark the close. Now, I use the close at 5 p.m. New York time. A lot of people use CME settlement. A lot of people use 4 o'clock. I use 5 o'clock because the last trade happens at 5 o'clock, and I want to know where they stashed everyone, every contract at the end of the day. So I use the 5 p.m. close, which is here, right? Now, overnight inventory, you look at the close and you look to see, is the trading underneath the close, above the close, or back and forth through the close? So if it's under the close, we say inventory is short. If it if it's above the close, we say inventory is long. And if it's going back and forth, we say inventory is mixed. Very simple. Now, what is the tactical advantage of this? How do you put this into practice? So if inventory is short, like it is now, the normal reaction, 70% of the time, is to take that inventory and go sell it at a higher price. So inventory will adjust higher, okay? If inventory is long, you look for a backfill. Just like inventory got long on Friday and it moved down. So that is the theory. Now, what if it doesn't happen, right? So say if inventory right now is short and we have a B profile, which is accumulation of liquidated assets. That is, you know, those are two things that would suggest that the market would go back up. If it does go back up, And say it just gets up to like 67, 70, and all of a sudden, boom, they're selling, and we come and take the previous day low. So if inventory is short and it doesn't, and it moves down like this, that means that there are sellers. If inventory is long and it can't get back down lower, that means that people are bid here, right? That's all it means. It's very, very simple. And when you're in our room, we go over it. It's one of the very first things we talk about every morning, right? So we do the same 5 steps every day. So the first step is where's the inventory, right? Because excuse me. Gosh, this cough is something else. Comes out of nowhere. Uh, so you're a trader, right? What are you trading in? You're trading in ES contracts. So if you were a rice trader or a spice trader, or you were trading whatever commodity you're trading, whatever it is, you need to know how much it's priced at, right? You need to know where the market's pricing inventory. Does that make sense to you guys? Otherwise, you're going to go like say you're trying to sell bananas and the market's selling bananas at 50 cents. Well, you don't want to pay 60 cents to sell them at 50, right? You have to buy your inventory and it's got to be priced properly. Okay? So you know that the inventory is here, right? And so if you're thinking of a log and you're building a position here, let's go and see where you are going to encounter resistance or other sellers, competition, right? So let's go take a look, zone into this chart here. There was an interesting news event, I guess last night. The chairman of the Federal Reserve is under investigation. So I'm sure that kind of spooked the markets a little bit. Uh, U.S. prosecutors are investigating Fed Chairman Jerome Powell. I don't know something about the building renovations of the Fed. I don't know. Anyway, it's beyond me. All I know is these markets get spooked very easily. The order books are thin. The ranges are big. So you folks have to really watch your whiskers, okay? Don't get sucked into buying things that keep going down and shorting things that keep going up. Okay, so here you can see I left this in. This is the overnight of Thursday. Here's Friday. So and there's Thursday's trading. This is Thursday overnight. Do you guys see something very interesting? Do you see that this is where the cost basis of the product was before the move higher? Does everybody see that? Hey, Dave, thank you. Good, good. Now look where we came back to. We came right back to here, right? We came right back to where the inventory is priced. So because it's a market, we took that crap, we went and sold it higher on Friday, and we suckered some poor people into chasing price, right? Because we put in a new high on the ES, right? We went to what, 70.18, right? We got all those poor bastards to chase. Now they're long. They wake up at 2 in the morning and they're like, oh my God, I bought it over 7,000. It's at 69.86. Sell, sell, sell. They panic. They sell out. The volume's what, 109,000 contracts, which is considerably higher than what we usually have. Okay? So our volume's a little bit higher. Dare I open my other trading account? Let's see here. I don't think I'm sharp enough to run trades this morning. But let's see. If I open my second instance of Sierra, maybe it'll help me. Yeah, so our volume's 109,000 contracts, which is usually we're at 35, 40,000 at this time, right? So there's a little bit of liquidation. Excuse me, sorry. Um, Alrighty. So overnight point of control is at just under 70. Sorry about that, guys. I'll be going on mute every once in a while I'm coughing up a lung. Institutions and smart money don't get the news faster than U.S. retailers, Dave. But what they do is they execute faster, right? The problem with trading a news event is because the people who actually run the markets, the large institutions, you know how, like we spend like 50 to $100 a month on a data feed. They spend hundreds of thousands, right? So their data comes in faster. Their technology, they spend millions on technology. They have people who are dedicated to, you know, running their tech. It's very, very, we're out there with a plastic fork. These guys are out there with, AI drones and, you know, F-15s or whatever the hell the latest fighter jet is, right? And we're out there with a plastic spoon. So that's why I don't like trading news. I like the news to go ahead and then trade the aftermath, right? I'm One thing I learned in this business. Excuse me. One thing I learned in this business is to never go first. You never want to be first, and you never want to be last. You want to get there in the middle, right? If you go first, generally what happens is you get run over, right? You let the large traders work out certain levels, and then you trade. There is nothing worse than trying to be a hero in a market. It's a recipe for disaster. So, yeah, it's not that they get the news faster. Well, I mean, I guess if you have a Bloomberg, your data feed is much faster. But also, in the time that they get the news and execute, we'll get the news, read it, absorb it, try and execute. The opportunity's gone. So that's very difficult to trade news in these electronic markets, right? Very difficult. So I guess I don't know when they put that announcement out about Powell, but I'm sure that an indictment against the Federal Reserve Chairman is, I mean, it is a grand jury request. So, the Fed received grand jury subpoenas from the Justice Department on Friday that threatened a criminal indictment. So that is going to spook the markets, right? That's going to spook the markets. And the shorts should be very happy because uh, now they get to cover with some dignity, right? Oh, I told you, I was saying, maybe I said, it's going to be a difficult trading environment this year. Um, but I'm secretly always hoping, maybe there won't be any drama. But man, alive, like every weekend there's something, right? Right? It's like never a dull moment. And unfortunately, unlike trading a stock, I made markets for 20, 25 years. And, I remember the financial crisis was one of the best years I ever had because we took, while everything else was crashing, we took a stock from 30 cents to $2 and just sold millions of shares, and it was great. And we were watching the financial news and everybody was coming into penny stocks to try and make the money they lost up in big stocks. So it was it was a beautiful year for us, our group, the one crew I worked with. But now in ES is insanely news sensitive, right? It's very, very news sensitive. All futures markets are very, very news sensitive. So if you're trading and you start seeing the price jumping up and down, or if you see any kind of signs of volatility like that, stay out. Don't get sucked in and try and capture those moves, right? Like if price just already if it started jumping around and behaving you know erratic, don't fall for that, okay? As soon as you got to pay attention, if that starts happening and it starts jumping around, just sit back and let the billionaires work it out. Always let the billionaires pay the bill, right? It's the best thing to do. And then once they've laid out a path, go trade once your setup shows itself, right? So, oh, sorry. Let's see. London's going to open in 13 minutes. Hopefully, I can last the whole hour. My voices. I got to do 2 sessions today, and I don't think for those who are doing one-on-one coaching with me, uh, I'll check in with you each individually. If I feel okay, I'll do it. If I don't, it's not fair to you. So we'll have to postpone until tomorrow. But I should be okay. I'll uh, I'll do a little fasting and let my body repair itself. Uh, oh, minute chart. See? Okay, I'm using the levels from Friday. We had a balance at 69.57 to 69.62. We went all the way up to that 7,000, 17, 18 and change. It came back down. And you can see we came right back to cost basis. Do you guys see that? So like, there's the cost basis. So if you don't have market profile, holy crap. I was trained by John Fierro. I was. Wow. Yeah, well, he was one of my mentors. Do you know him? If you do, please say hi to him. I think he's in Florida now. I hope he's well. You know, he destroyed a lot of companies, but you know what? He was always really, really nice to me for some reason. Yeah, Fierro Brothers, FSCO. He saved our ass on pets. We were short at $3. It went to 6. We shorted more. Then it went to 12. And then we were like, oh God, help! And he came and put 1 million shares on the offer at $12 and hit every bid. I still remember it like it was yesterday. If not for him, our goose would have been home fried, not just cooked. Yeah, the good old days. Yeah, it's amazing that anybody still remembers that name. Okay. So I'm just marking out where the sellers are at the top of these candles. And we came right down. We didn't take out that 57 3/4. It's probably been 20 years since I spoke to him. Easily. Hopefully he's relaxing on a beach in Florida. John was something else. He used to have to wear a bulletproof vest to work because he shorted so many deals. He shorted all the wise guys deals. So it was always like, he was always afraid that someone was going to take him out. See, that's back in the day when market makers were predatory short sellers, and he was the best. He was the best. He was the best predatory short seller there was. That stuff doesn't happen anymore because I don't know, there's only 10 market makers now because they've consolidated market making so much that, and everything's algo and now they have regulation SHO, which means you can't short unless you have a borrow, right? Which is, I mean, come on. Speaking of borrowing, have you guys been keeping track of the rumblings in the silver market? I just keep my eye on silver. I don't know. I don't know. Somebody told, well, my girlfriend reads everything and she watches like 30 podcasts a day. And she absorbs information like a sponge. So she's like, yeah, I think there's going to be a short squeeze in silver. I think it already happened. She goes, no, I think there's more coming. Something about a bank. I don't know, one of the banks being short and blah, blah, blah. But the thing is, it's going to be different than 71 because I don't think anyone's actually. hoarding the physical. Like in 70, when the Hunt brothers cornered the silver market, they were actually loading silver onto private jets and flying it to Switzerland. What to look for the London Open? The stops, Worm. The stops. Right? So London Opens, it's going to either take out the K high or the K low. Yeah, I don't trade silver. I'm just curious. I'm just curious to see what happens in the silver market. So just use the levels, folks. I should put the levels in the room. I'm a little behind. I'm not feeling well, so we'll go to the London Open. I don't want to lose my voice because I got to do another session. But you see how it's not doing anything, Worm? How it's just chopping here? Right? So your trading opportunity is going to be a little limited, right? You know, you're in the room every night, right? We had a nice look below and fail of 69.62. Excuse me. Oh, yeah, so. And it's just stuck here at 66, 65. It's a fresh week, right? If I feel like this, I won't trade today, that's for sure. I never trade when I'm sick, tired. It's just capital preservation. You know, you got to preserve your capital. Right? You have to have respect for your capital. If you don't have respect for your capital, it's not going to stay with you very long. So I'd rather not make any money than blow up accounts and lose money. My reflexes aren't going to be the greatest. And right here, there's no opportunity. So the trades that we take, for those who are watching on YouTube, so you're like, okay, JJ, what trade would you have taken? This is a beautiful trade for us. When it looks below, dips into the blue, comes back into the green, we buy, say, like 63, 64. We put our stop here at 62, sell sub at 66, and sell into the strength that is created by a lack of supply, right? We don't trade in the middle of a zone, especially when the candles get small because it's choppy, right? Now the point of control is moved down, which means inventory is getting priced lower. That's good. That means good absorption, right? That we are absorbing the selling, liquidating inventory, liquidating into wholesale inventory to hopefully be redistributed into the retail flow for profit. If that fails to happen, right, we will take out that overnight low and take out the previous day low. So those are your references. These are your references for, so this is a market profile chart, which is just a fancy half-hour candle chart. That's all that is, okay? It tells us a few things that a candle chart can't tell us as quickly, so it's nice. So this is a map of the city, and this is the map of the neighborhood we are in the city. This allows us to execute using minimal risk and intelligent risk. Oh, excuse me. Yeah, this silver chart's kind of interesting. Yeah, it's going to be another interesting week in the old ES, in the old markets. So, the other thing that you could look at on a half hour, right? There's the overnight low. There's the next half hour low, the next one, the next one, the next one. So when London opens, that's your first target if you're short. Hey, AZS, how you doing, brother? Right? So if you're short, the first target is 64 quarter, right? But you see the offer lifting and you see that there are sellers at 68. Not really a great trade right now. Yeah. Let's see if London drank their Yorkshire tea. Oh boy. Oh, excuse me. Oh, Cisco, thank you, brother. I didn't even notice I had it on 5 minutes. I was teaching somebody how to use the 5 minute chart last week and I just left it. Thanks, brother. Really appreciate that. You know where you want to look for a short, Stuart? You want to look for a short here at that 69.80. You're close. You're about 10 points off. That's where the supply is. The supply is going to be here. That equals resistance. That would be a really good place to lay on a short if the market goes and takes these upper stops. Right now, if you're short, I don't know. I don't like shorting at cost basis, you know? I don't like to be short where everyone's buying. You know what I mean? Right? I would like the market to go up and maybe do a look above and fail of 70, like you said. That would be beautiful. But right now, they're not getting my money right now. It's a little, what do they say in England? It's a little dodgy, right? Offers lifting. There's sellers at 67 and a quarter. Yeah, that's good. That's good, Stuart. I've always, I kind of knew this, but I never verbalized it until lately. When you short inside cost basis where everyone's buying, right? That's tough because everybody's, covering their short and going long here. So if London opens and it can't take out these lows, it will turn because overnight inventory is about 90% short. Yeah, higher lows on the 1 minute. There seem to be bids here, right? There's 65 bids here. So I don't know. Let's see. I'm not taking anything for granted. The other thing too is when I'm sick, I always question my judgment. So I tend to do a lot more watching than, predicting and that kind of thing. Um, I'm very happy to sit back and watch. Not really useful for you guys right now, but London's going to open here. See, London opened. It went down. It went right to that point of control, right to the cost basis, and then rotated up. You see that? Everybody see that? And we went right to where the sellers are. Now, if the sellers see buyers lining up, they will raise the price that they are offering at. They will raise their offer here and then here. Excuse me. See? See how they're lifting the offer? They're trying to get people to pay more, right? And what you're waiting for is for the sellers to step in and show themselves, just like they did right now, right? So the next level will be up here, just under 70. There's your look above it fail of 70. So say you did short this. Say you shorted 70, put your stop at 71, and you'd be covering in the 69, 68 area, right? If you're long, I'd be selling into this. The next area you're going to have sellers are 71 and a half. Right? If you can't get filled on your bids, say if you were short here, your stops here, and you put buy orders here and here, they don't get executed, you know that there's not enough supply, right? Now the point of control has moved up as the shorts are coming in to cover, right? The big green candles are the shorts. Remember somebody said, should we short down here? No, don't short in cost basis because then you'll end up pushing the market higher when you go to cover, right? There's still sellers, right? There's still longs trapped above us, right? That's pretty much it. Good stuff for him. Good stuff. Excuse me. Nice work, Cisco. Nice work, guys. Oh, okay. Hey, Moran. Yeah, I'm still stuffed up. Hopefully it'll be done in a day or two here. How was your weekend? If it holds flush to the top of the candle, that yeah, the offer is still there. You can see that the sell orders are still there, right? It took a stop, right? It took that stop. When it took that stop, if I was long product here, Stuart, I'd be selling into this. That's why traders who trade breakouts usually don't do well, right? Because size sellers who are long here will sell into the breakout. The breakout creates buying, right? So when a breakout creates buying, we are taught to sell into it, not to buy it, right? So that's why you guys are buying and the size sellers are selling into it because a breakout run stops, that creates buying, then people chase price. Exactly, exactly. That's why we trade from stop to stop, Stuart, right? So if I was long here, say I was long here, if I was long at 66 and my stop was 64, I'd be selling at 70. That's what causes that reaction. Exactly. Right? Now, if there's enough buying, it'll take that stop and take that stop and then go take that stop. But if there's not enough buying, the sellers who are sitting here, they've been holding product for what? 4 hours? Right? So if you're holding product for 3, 4 hours and you see an opportunity, boom, you sell into it. Right? Because you're not selling two or three contracts, you're selling thousands. Right? Breakouts only work if there's enough buyers that warrants lifting price, right? The only way a breakout trade works if there is enough buyers and follow through buyers, right? You need follow through for a breakout to work. Nice work, Charles. Way to go. Beautiful. 4 points. I'll take 4 points a day, every day, all day. That's a beautiful trade. That's an absolutely beautiful trade. See now, when we come back, look to see that low here at 66, right? See if that 66. Now, if we get underneath this, we'll look for that. And that's why breakouts fail, right? Breakouts are really hard to trade. They're, you know, and it's not a really, you have to be able to judge. Like if it's a faster market and there's more people, right? Then the breakout may work better because there's more follow through. But you guys got to remember, it's 3 o'clock in the morning in New York. Now, a lot of people are talking about, Tokyo Open and all that. That's all useless, right? Most of the majority of the order flow in all of these markets is U.S. based, right? There are traders around the world, but the really size traders are U.S., right? So it's 3 in the morning. There's not going to be anyone around to like run and buy this thing. So the traders, if I was long, say I was long 50 to 100 contracts between 65 and 67, right? I'd be dumping into this thing like 10 men. Alexander, I have no idea. You tell me, brother. I'm sick, so I didn't put VWAP on there. Sorry, guys. Can anybody tell me where VWAP is? You don't have your trading software open, Alexander? 76? Yeah, okay. So it's up here. Okay, cool. Yeah, I am not on. I'm like you'll notice that I'm not taking any trades. I didn't take any trades on Friday either. I was just feeling horrible. So there's VWAP. Yeah, it's brutal. Yeah. So VWAP's at 76. We're under VWAP. So hopefully for the longs, the people who are long here, you could take this over time and try and sell it up here later. But right now we have sellers at 70. At least you know where the sellers are, right? The next 17 minutes going to take down and see where the bid is. And it might just be choppy while we wait for the inventory to fall out and we absorb it here. right? Does anybody have any questions? I'm going to let you guys go a little early today. It's just, I was like coughing up a lung. I'll be back at 2 p.m. UK time, 9 a.m. Eastern time. And I will see you then. Yeah, if we take out 62, look for more downside. I anchor my VWAP at the Globex Open. I anchor my VWAP at 6 p.m. Eastern Time, 23-hour VWAP. Very simple. Because most trading platforms use 23-hour VWAP, I use session VWAP. Now, you can anchor it anywhere you want, but I like consistency. Yeah. All right, folks. Have a wonderful morning. Trade safe out there. We will see you at 9 a.m. Eastern Time for the pre-market open. And those of you who do one-on-ones with me, just check in. And if you have any questions, I'll try to answer them, but I'm probably not going to be doing any sessions today. I don't want to lose my voice. Thanks, folks. We'll see you in a little bit. Trade safe. Bye.